Now, I'll give you an example of when people don't have this, is an attorney that goes off and possibly starts an application business. They decided they want to offer some sort of new application, and now instead of, it's like it becomes more and more clear this is a hobby because that person's never done an app. Hello YouTube, and welcome to our second segment of profit, motive, hobby losses and hobby loss rules. This is Greg Freyman from Freyman CPA, welcoming you to another segment and another controversial topic that we have today. This is part 2 to the first part that describes what hobbies are for tax purposes. So if you've listened to that YouTube and you understand now what a hobby is for tax purposes and what's deductible and what isn't, how that works under the current tax law, let's now discuss how that plays out when you just started your business and what exactly will happen if the IRS determines that you're not in business and that you're running a hobby. All right, so welcome. And profit motive. So the IRS wants you to be in it for profit. Now, in the real world, when you start a business, you don't always automatically end up in profit. Matter of fact, most businesses go out of business in the first 5 years. I'd say a good 70 to 80% of the statistics would read that. Fact and truth. But what happens if you start your business, you legitimately put everything you got into it, and it's just not making money? So you have first year, it's made losses. Second year, it's made losses. Third year, it's made losses. What ends up happening, the IRS unfortunately has they have a presumption. So if they'll presume that your business is a hobby if the business does not generate income in 3 out of 5 years. So you got 3 years out of 5 to show income, and 2 years you can show losses. So very interesting. What you might say to yourself, well, I've poured all my money into this business, I'm giving it all I got, and basically what it's doing is it should be hopefully making some money, but it's not. And I'm still pouring more into this business, trying to revive it, trying to keep it going. Maybe COVID came along or who knows what, and things just aren't looking great. So it's more than 3 years that I'm showing losses at this point. Does that automatically mean that the IRS is going to come in, scrutinize me, audit me, and kick my business out as a hobby as opposed to a business? Yes, unfortunately, that's what I'm saying here, that the IRS has the capability to do that. And that's why it's important for you to watch this segment and understand exactly what it is that we're trying to convey here. We're going to teach you how to protect yourself from IRS scrutiny today, and I'm going to also educate you on what the IRS looks for when they're auditing people. So you should be aware of what you should have going on in your business to ensure that you're going to be able to pass any IRS scrutiny. Again, when you're dealing with profit motive, hobby loss rules, all that other stuff, you're basically going to have a business, right? And that business is, let's say it's creating losses. Year 1, year 2, let's say it lost $2,000. Year 2, it lost now $15,000. And year 3, it lost now $27,000. And you've been pouring in your money. You've liquidated your pension. You put that in there. It's been the rough 3 years because, in reality, a lot of businesses don't automatically start making money. Not the first year, not the second year. It doesn't mean, it takes time to get off the ground. Sometimes there's a lot of investment that happens on the front end of things before it even starts turning a profit. You need to hire people, you need to build out your warehouse, who knows what. So the chances are of you turning a profit in year 1 are very small. You probably should be really well versed in what you're doing, have a great stroke of luck, and have definitely been able to succeed on many fronts. Year 2 is already like it's very possible, depending on your business, to have losses and maybe even already start turning a profit. So in most cases, in year 1 and year 2, you want to start turning that profit. And what ends up happening when you're not running the business for whatever reason, because we're all able to go and open up a business That doesn't necessarily mean that we're great business people, right? We might not know everything that there is to know to open up a business. I've seen it in practice. I've seen people retire, pour in everything into their business, and just close up doors after having invested, $750,000 into it, and anywhere as little as $100,000. I've seen people put $1.5 million into their business, and it would just fail. It would just not, they would close out, go out of business, or they wouldn't do as well as they expected, but they keep pouring money, getting loans, all sorts of things, and then it becomes really dire. So very few people actually jump into this next third year with losses, because most people will just call it quits. They have to make a living, you understand? But again, for tax purposes, every year that you're running losses, if you have any other income, the IRS will basically start losing money, because you're writing this off and this off your other wages. So the IRS starts losing money each year, year after year, and they start to say, well, what other reasonable person would keep doing this? Where's the profit motive? Why in the world are you losing money year after year after year? I mean, some people go 6-7 years losing money, and that's when the IRS steps in and basically pulls it over and says, this is not a real business. You're not basically going to run a real business, and they start challenging that it's a real business. So that's kind of like true too, because if you think about it, and now when we're talking about this situation, this is a Schedule C situation, all right? This is not a S-Corp situation. This is not an LLC partnership situation. We know, okay, that when you have an S-Corp taxation, or when you have an LLC partnership taxation, these entities are still subject to the hobby loss rules. They are. But we've never actually seen an audit that happens for hobby losses coming out as a partnership or an S-Corp. So sometimes when we advise on people as to how to start up, we'll tend to say, yeah, the Schedule C route as an LLC or sole proprietor is an easy way to go. Yes, absolutely. But we also have to weigh one other variable into the whole entire picture, as if everything else wasn't enough. We also have to see, what is the outlook for that business? Is the owner expecting to lose money for 3 or 4 years, which can happen? And in that case, we might want to just start off as an S-Corp, or perhaps it'll be a partnership for tax purposes, because these don't get pulled over for these. It's only the Schedule C and sole proprietor, sole prop, that tends to end up with this kind of scrutiny. Why? Because there's no separate reporting. The Schedule C and the sole prop is still being reported on your federal 1040. It's still being reported on the same form. It's just a schedule, a sub-schedule to the 1040. So the S-Corp is actually pulled out, and the LLC as a partnership is pulled out from your personal return, and it's a separate filing, and somehow that just, even though they're subject to the same rules, that is never pulled into audit. It might be soon, because of the TCJA, we might be starting to see more of that. Again, but the reporting here is way greater. And so is the reporting here. The reporting in both of these types of situations has dramatically gone up since the TCJA, and that can also be another reason why they're not looked at. But the primary reason is that there's way more of these than there are of those, because these are more complex and they take more time and more accounting and all these other things. So most owners, small business people, are basically set up like this, and that's why it's scrutinized. All right, so that's the premise. Basically, I hope you guys got that and understand exactly what we're dealing with when we set up a Schedule C, a single member LLC, as we call it, or a disregarded entity for tax purposes. So you might be asking yourself, all right, well, now I have, great Greg, I'm very happy that you gave me all of this information. But let's say I run my business for 4 years and I have losses for 4 years. Does that automatically make me a hobby? And will my losses be challenged, and will they foot me a bill for those 3 years? By the way, when they do audit, they go back 3 years usually. They don't go back indefinitely. Well, and will my business now be subject to the scrutiny? How can I protect myself? Great question. So when this does happen, the very first thing that IRS is going to do is going to look at the 9 factors. And again, in our world, guys, all right, in our world, just don't forget that there's never like a black and white. Everything's kind of weighed, and there's many variables, and if this, then that, you know, if 1, then 2, then 3, maybe 5, go back to step 2 and then do 1 again. That's how our world works. There's many variables and things are not that straightforward, unfortunately, right? So the 9 factors that the IRS looks at when they pull over a return for profit motive or for hobby loss, seeing that it's been losing money year after year and it's been writing off losses year after year concurrently. So the IRS came up with these factors, and again, you might be able to check off 7 of these boxes. They'll still argue that you're not a business because they're so hard to like really pinpoint. You know, you can be doing everything right and they'll still argue. So number 1, manner the taxpayer, and I'm going to put TP as an acronym for taxpayer, carries on the activity. This is very simple. I'm not going to go into all of that, but what they're really looking at is, are you conducting your business in a business-like manner? Do you have insurance? Do you have an LLC, right? Do you keep accounting ledgers? Do you have banking, and is the banking in a business name? Is the banking commingled with a lot of personal funds, or are you strict about it? Are your business cards in your personal name, or are the business cards in your LLC name? And so on and so forth. So all of those formalities that we always tell you guys about, how important it is to keep those, this is yet another reason why it's so important to keep formalities in place and conduct your business in a business-like manner. Don't go nilly-willy. We see a lot of that with small business. There's no separate rules for small business than there are for big business. There's absolutely no favoritism in any direction. If you're a large corp, you have to abide by the same rules internally as you do in a small one-person shop. Yes, it's true. The expertise, number 2, the expertise of the taxpayer or his advisors. All right, well, this is a really good one. So I'm an accountant. I'm going to go and start a bookkeeping company or a payroll processing company. I have the expertise to do so. Maybe not all of it, so I'll get advisors, because I've never ran I haven't done like a payroll processing company. So if I were to start a payroll processing company and only do payroll processing and offer HR and offer benefits, I'm not very well versed in HR. Matter of fact, I don't know anything about it. Matter of fact, I can't advise my clients about HR. So you better believe I'll need to hire HR professionals to do it. But I do have the expertise that's related. Now, I'll give you an example of when people don't have this, is an attorney that goes off and possibly starts an application business. They decided they want to offer some sort of new application, and now instead of, it's like it becomes more and more clear this is a hobby, because that person's never done an app. That person's never, doesn't know anything about computer science, didn't major in computer science, and just decided one clear day out of the blue to go ahead and start, an application for whatever reason. So there was no expertise. So why are they doing this as a business? The chances of that business failing become greater.